Hey everyone, happy Friday. Bit of an unusual time for us to do a live session here, but I think based, based excuse me, that's what happens when I try to do a session this time of day. Jesus. Sorry about that. Anyway, I was trying to say that based on the conversations we're having with people, I think it's important to do an update here after yesterday's sort of post-NVIDIA price action and certainly based on the research that we've been doing since. We're going to get started here in just a second. I just want to make sure you guys can hear me okay, that I'm not just coughing or talking to myself. So if you guys can just really quickly give us a thumbs up or something in the chat room here, just to make sure that we're good, then we'll be able to get started here shortly. Get some water here. All right, very good. Yes, and thank you for the audio-visual test. It sounds like we're good to go. Cool. We'll just give it another minute and then we're going to get started. Just so you guys know, the purpose of this session here, we're not going to go very long, but thank you guys. I much appreciate the audio test. The purpose of the session here today is it's not to go very long, but rather it's to cover a few key things that we are watching very closely, and I know that people are sort of wondering about. That's number one. Number two is to take your questions, right? So if you have questions around sort of what does yesterday's price action maybe mean for the rest of the year? Again, I'm not trying to put questions in your head, but I know we know that those are the kind of questions people have based on a bunch of emails we received, a whole bunch of client conversations already today and yesterday early evening. So that's really the point. This is, again, your session. You ask questions as well as us sort of showing you something. So I would say let's get started. I'm going to quickly put my watch on mute. So what I'd like to do is I'd like to show you a few things. A few, I think, important context charts to take into the weekend and then likely into next week. So, by the way, what you're watching here is a live chart of the NASDAQ 100. The signal has been trading it today. You can see this is our TST trend or momentum indicator. And you can see sell signal, profit target, buy signal, profit target, sell signal, nope, didn't reach, stop out, buy signal, profit target. So it's been a bit of a choppy day, but directionally to the upside, largely because of options expiration today. So we will see what that looks like next week, which gets me to the charts. So, and we can put this down here at the bottom right to see if anything else happens. There's an hour left on the tape here, Friday afternoon on an options expiration day. So we'll see, it might be boring. Most likely, maybe an outside move happens, but for the most part, yeah. Okay, so what I'd like to do is I'd like to give you just a little bit of perspective, and this is more the technical side of it, because I found that if we explain things from a technical perspective first and then kind of fold in the other things, it tends to resonate with people more. So that's what I like to do here as well. So what we're looking at here is just a regular daily chart of the NASDAQ 100. And so I want to focus specifically on yesterday's price action. Yesterday's price action, taken in isolation, so just given the price action, is not something that I typically would want to ignore, because it shows that people basically were just waiting for after NVIDIA in the cash session to basically sell the stock. right? And that pulled the whole market down. So what does it mean from just purely a price action perspective, again, before we fold in some other things? When you have what happened yesterday, which is called an outside reversal day, and again, we're going to start with the technical stuff of it first. This is just the QQQ NASDAQ 100 on a daily chart, meaning, again, each one of these increments is 1 day. So just to explain this a little bit for those people that may be new to this. So when you have an outside reversal day like that, again, I'm going to remove this circle. That's the red bar yesterday. It opened up there and then actually closed more or less at the dead lows of the day. We're getting a bit of a relief bounce today. Again, I think a large extent, if not all of that, could be related to options expiration day. I've traded through 25 years of options expiration days, so I can tell you, typically I don't take the price action options expiration days too serious if I really haven't paid attention at all. But basically it means distribution, and it is interesting to note that we actually do have a reference point of another distribution day which happened around the same exact spot, and that was actually on the 10th of October, which to me is further testimony to the theory that what we've seen up here is, sort of an isolated price action that may have been a blow off top. I hate to make that's a very big statement to make, and so I certainly want to hedge myself because I need more confirmation, way more confirmation for that. But we did actually have an island reversal, which is the market gapping up on the 27th of October. It actually gapped up for 4 days in a row. But still, the real island reversal actually happened between the up gap of the 27th of October and the down gap of the 4th of November. That's the real island reversal. But in general, we can make that a bit larger and notice that the selling, that the pretty violent selling, right, both took place on the 10th of October and basically at yesterday's open. So that's these two spots. And again, I don't think it takes too much of a genius to see that is, I'm not sure if it's like almost to like the cent, the same level, okay? So now the question, of course, is where do we go from here? Well, a couple things. First of all, we do have to look at this on a weekly basis. So if we peel back the chart and look at this on a weekly basis, it doesn't really look a whole lot different, but I like to give people that perspective so they kind of see what this would look like on a weekly basis. But I think you see the same idea just zoomed out, that maybe, just maybe, this reversal up here that took place between late October and early November, holds quite a bit of water. The way that I like to really get more confirmation on this is, but not just by drawing lines and looking at, the price charts, but I need to see what our models are actually telling us. So for me, it's important to know, what does our trend following model tell us? Well, our trend following model, which is more complex than just drawing lines, essentially remains in this green background color. The phase is, we call it a bullish trend. And you can see that trend basically started in August. And trend, again, a trend is typically something that lasts multiple months, maybe multiple quarters or longer, right? Which is why it takes a while to start. Not to be confused with momentum. Momentum is something much shorter term, okay? So, but the trend hasn't changed, is my point. What has changed, and this is really, really important, is momentum. Momentum has changed, and I'm going to try to show you the chart here. So this is our momentum model. So this is the TSD Trender Momentum Indicator. I know a lot of you guys have it. If you don't have it, there is a Black Friday offer that you can still take advantage of until I think it's until Sunday. I think it's Sunday. It definitely shuts down this week. I just don't know if it's the end of the work week, or the end of the calendar week. I don't know, but it could be Sunday. I'm not sure. Anyway. But you can see that we are getting a shift in momentum according to our model. And the shift in momentum basically means um, basically means that we've had a bearish momentum signal in February that led to a bullish momentum signal, and we haven't had a signal on the daily chart until just earlier this week on Monday. So this Monday was the 17th of November, where we received a bearish momentum signal. So if I now combine these 2 points of analysis, meaning the very simple just chart analysis, right, where I'm gaining some perspective on kind of what's going on. The reference points here I do think are quite important, and I overlay that with sort of a bit more a bit more advanced analysis, a bit more in depth than just doodling on the charts. Although that is important to starters, we then get this picture that this momentum shift to the downside may not be something that was just a one-day phenomena yesterday, because it's been really taking, to me, this whole thing started in early October, and I'll show you why I think this started in early October in just a minute. I want to quickly take just one step back before we go back to this chart, and I want to show you guys a chart that we talked about, and we actually built it together. We actually built it together in one of the set the markets, which this week, and you can see sort of the rounding topping nature of what's going on. Now, there's a whole other stuff going on. I'm just giving you the sort of the technical part of it. But we could start looking at what the bond market is doing, the credit markets are doing. We can look at Japanese yields. So that's kind of the thing. But let's just look at the price action. So we're trying to give you perspective here based on what happened yesterday, what it means going forward. The price action in general that we've seen, and again, I said before, it's been really since early October, is really one of at the margin, net distribution, right? So the question now, of course, is what does this mean from a trading perspective? Multi-day, multi-week? Maybe way more importantly, what does it mean for your net worth, your investment portfolio? And I say you, I'm not speaking to anyone specifically. I don't know you guys in terms of what you have, but just in general, right? From a trading perspective, I think the biggest pain trade would be if we don't see a year-end rally, okay? And all these assets here, the top one is the equally weighted S&P 500. The second one is software stocks. And I know we don't want to squint too much here because it's kind of against the point, but you can see we've had breakout, fake out type of price action taking place. Same thing in the DAX, by the way, which is Germany's large cap stock market, stock index. Financial stocks, right? All of them have basically attempted to break out and have then kind of been topping out, and now we're below that breakout point. High yield bonds are kind of trying to do the same. They haven't quite done it yet, but we could add another 3, 4, 5 charts on this. They would all look the same. Let's look at performance for the quarter. So for the fourth quarter in different asset classes, so you guys can see this. I'm just bringing it over here in a second. So let me just make a quick adjustment to my chart here before I bring it over so that you can see this without having to get too confused. Here we go. All right, so what I'd like to share with you now is where the pain trade could come from. So if we go quarter to date, there's a whole bunch of lines here. Let's just focus on the S&P 500. So the S&P 500 for the quarter, for the fourth quarter, it was up as much as, 6 or something percent. It's now, was it up 6%? No, maybe 3%, excuse me. It's now up, actually down 66 basis points. So minus 0.7%, let's call it, the S&P. So we are probably, next week is Thanksgiving week, so things can get a little bit lackluster unless you get some crazy news out of nowhere, which is possible but tends to be less likely. If we don't start to see the S&P really get its act together really soon, like probably the week after next, there is the risk that we see either just absolutely no performance or some sort of cascading lower into the end of the year. The S&P the December month tends to be a good month, but we're at a point where I've never seen this many people betting on a year-end rally, fourth quarter rally. And if you go back and you look at the headlines, people were most bullish coming into October. And that's exactly where basically that rally has faded. And I think that is sort of the concerning part right now that you have to think about from as a trader, but also as an investor, what it might mean longer term. I'm more concerned about sort of giving you the analysis here for a multi-week, maybe multi-month perspective, because we do have to get through year end first, I think, before we can kind of start looking as it from a trading perspective into the new year. Continues to struggle here. The longer that continues, the more fund managers and others are either going to completely give up well, if it doesn't happen soon, let me rephrase this. If it doesn't happen soon, there is the risk of this just faltering. Because right now there has been, so far now for the quarter, after being up, it's now flat. And it's largely due to a few trading days. So I think that's something that I would keep in mind. And certainly we are keeping in mind. Now, the chart that I want to quickly show you here that I think is one that we can end on and then move to any questions, if there are any questions, and I would love to hear, is this one here. So this chart here has to be taken with a grain of salt to the extent that the S&P 500, or this is actually, yeah, this is the S&P 500, which is the blue chart at the top. They're both blue, so that's kind of, let me see if I can change the color here for a second. I'll change this color here. I'll make this one red here, or there you go. Okay, so this is just the charts of Bitcoin versus the S&P 500. So Bitcoin essentially is the orange line. The S&P 500 is the blue line. You will notice that Bitcoin today is actually down 3%. The S&P is now up 1.4% or so. Again, I think it's largely due to options games being played on options expiration day. And that's nothing new, by the way. So I think the truer test will come early next week. But again, we have Thanksgiving week next week, which tends to at the margin be kind of blah, right? So also the administration was floating a bunch of bullish headlines over the past few hours to try to kind of keep the market from collapsing. Probably, I don't know, that's what it felt like. It doesn't really matter. The point is Bitcoin continues to cascade. And if the correlation holds any water over the past, it seems rather likely that equities would have further to go on the downside. So I just wanted to give you a bunch of sort of thought points here heading into the weekend. Again, what I definitely can tell you is that from a momentum perspective, we do now have bearish momentum on the daily charts, which is at least a multi-week, multi-month thing. Now, it can change very quickly, but typically that's kind of the time frame. If you have the trender indicator, you have access to this indicator, and you would have gotten that same signal. So with that, I'm going to move it on to, I don't know if there's any questions, but I want to take some time to answer any questions. That's right, if you don't, okay, good point. So if you don't have the trender yet, which is essentially it's not essentially, it is our trender indicator, our momentum indicator, excuse me, you can grab that for our 4th of July, Black Friday. It's our Black Friday special, so you can go grab it. I can give you that link quickly if you guys want to grab it. Otherwise, again, let's just go into questions and see if there's anything that I can answer that is on your mind, and hopefully this has been helpful to give you a bit of perspective of kind of where we think we are. So if I were to summarize everything I said, the long-term trend so far for the indices, be that the NASDAQ, be that the S&P, remain intact. So that has not changed according to our trend following model. This is the market rover. What has changed is momentum, right? So momentum for the first time is bearish, so that's a more shorter term time frame. Again, more multi-week ish, right? Tends to be multi-week ish. So that has changed, and I think our downside target is about 570 ish for the QQQ. For now, that's what we call our free profit target. So best stocks to short now. Well, I mean, again, it's a good question, but I think you need to keep it beta. So personally, I would go for stuff that's kind of been floating higher. You look at a company like, I own some puts in something called SanDisk, and this is not to press my own position here, so please don't get me wrong. I'm just trying to address the question. I like SNDK. I think that's the kind of a bubble stock. That's the kind of stock that's going to get marked up and down, on a day like today. Other than that, I would keep it high beta. I think you keep it to something like the NASDAQ 100, and you can figure out your own stuff within there. But I'm more concerned about the broad beta than individual stocks here, because ultimately the broad beta, meaning the indices, are going to dictate anyway what's going to happen to individual stocks, particularly here towards the end of the year. So, yeah. Oh, also, I can show you this. Some people before were asking about NVIDIA and yesterday, so I'm happy to quickly share that with you as well. What about NVIDIA? Right. Okay. So first of all, let me quickly add the trender momentum indicator so you guys can see what's going on with NVIDIA. If you just give me 1 second here. Okay. So for example, yesterday morning, yesterday NVIDIA opened up 5% and closed down, 3% or something. And so those are momentum trades when that happens. And so you can see, for example here, this is the intraday movement of NVIDIA yesterday. Okay? In fact, I need to mark this a bit more so you can see this. So here. Okay. So this is yesterday's momentum move. Where you can see momentum started accelerating to the downside. And I think, your comment there on, I think this is the point in the market cycle where people have to be very careful listening to narratives being spun on TV or anywhere else for that matter, because we're late cycle. And so most people that are I don't want to say most, but a lot of people that are out there right now that are telling you you're buying SanDisk or whatever it is, you have to understand there is usually a narrative to this. So I can tell you this as a former investment banker. We were dumping all of our crappy loans and bonds when I was at JP Morgan right in 2007, 2008. In fact, it started already in late 2006. And the narrative was, that they can't widen much more in terms of credit risk. And of course, they all blew up. I don't think it's a lot different right now in terms of the basic story that's playing out, in terms of what the game that's being played by Wall Street. So I think it's important you do your own work and respect the price action and kind of ignore the narrative that's being spun, right? So if any of you guys like what I'm saying here, if this is helpful, please give us a thumbs up like. That really helps us to be able to continue to do these live shows. And so I think you have to respect momentum more than anything. So because momentum is going to be what turns first, and then the trend will change at some point. I don't know when that is, by the way, but I know momentum has changed so far. So if you're using the NASDAQ, the trend or momentum indicator, there's one thing that we know now, at least for now, and that is that momentum has changed. Again, we have a profit target at 573 or so, and we'll kind of see how that plays out. But I think that so far is a pretty good target to keep in mind. If you don't have a process to trade momentum, I think it's important that you get that process, because momentum allows you to be making changes quicker to your trades and to an investment account than the long-term trend. So by the time someone on TV is going to say it's time to sell stocks, you'll be way ahead of it because momentum has shifted. So whether that's intraday, so you can see, for example, our trend or momentum indicator, which you can grab, by the way, for Black Friday offer here right now. That offer, again, I think it's good until Sunday. This is NVIDIA yesterday morning. So we had a short, and you can see it reached the profit target. And I should get rid of these lines here because that's not part of the indicator. That's just drawn. But you can see we got a sell signal, and then we actually did this live for our clients yesterday. We reached the free profit target. Could have bought some puts or short the stock. So now we're getting the same thing on the daily chart. This is a totally different time frame. What I'm trying to show you is that momentum tends to shift first, and then the trend will change. Does that make sense to everybody, those two time frames? So, at the risk of repeating myself 10 more times here, I'm going to leave it at this here unless there's more questions. But I do hope this is helpful. I will leave it with just this thing here. If you don't have our trender momentum indicator, you can go grab it. It's just $397 for the full year. You also get a full 3 months of our scanner included as well, which is like a browser-based tool. If you have any questions, there's a phone number there you can call. So that's really all I wanted to accomplish. So I'm hoping this was helpful. Wish you guys all a great weekend, and we will be back here on Monday morning with our Set the Market morning call at 9 o'clock Eastern. And next week, of course, we have a holiday shortened trading week. So Monday, Tuesday, Wednesday, Thursday, Thanksgiving, and Friday is a half a trading day. So for the most part, I think most people are going to be fading out by somewhere around late Tuesday or so. So go chase some birdies, Matt. I'm about to go head up to the SoFi Center to play in that Tiger Woods league, whatever, that indoor league. So that's what I'm about to do here in a little bit, and hope you guys have a wonderful weekend. Again, any questions, please let me know, and we'll see you guys back here next week. Take care.